In this session, I'm going to discuss on one of the activities that's in your workbook on Schoology of part 2. The two partners in this question are Mosese and Malakai. For this question, we have to prepare their profit distribution statement, current account, capital account, and equity section of the financial position. So first, we'll discuss on how to do the profit distribution account. So first thing, we have to write whether the business has a profit or loss. That's what we are going to share between the partners, distribute between the partners. So in this question, we can see they have a loss. So we'll write net loss. It's a loss, so it will be written in bracket. Then when we follow the format of profit distribution, we have to add first, and we add interest on drawings. Looking at this question, the drawings for two partners are 12,000 and 8,000. Interest on drawings is at 5% if they are taking more than 4,000. So Mosese has taken 12,000. 12,000 minus 4,000. If he's taking more than 4,000, on that he'll be charged 5% interest. So 5% of 8,000 will be Mosese's interest. That's 400. And for Malakai, Malakai has taken 8,000 minus 4,000. The extra he is taking is 4,000. On that 4,000, he'll be charged 5% interest. That's 200. After that, we have to see if any partner has a debit balance. Yes, Malakai has a debit balance. So on debit balance, Malakai will be charged interest, and for business it's a revenue, so we'll add. If a partner is charged, it becomes business revenue, it will be added. So Malakai has to pay interest, that's revenue for the business. He'll be paying 4% of 6,800, that comes to 272. Now we subtract all the expenses of the business, expenses that they have made towards the partners. So first thing, we'll have interest on capital. Looking in the question, Mosese's capital was 40,000 and Malakai's is 60,000, and interest on capital is 5%. So 5% of 40,000 is given to Mosese, 5% of 60,000 is given to Malakai. So altogether, business is giving 5,000, interest on capital 2,000 to Mosese and 3,000 to Malakai. Next, we'll be writing less interest on current account. Partner with the credit balance will be given interest. In this case, Mosese has a credit balance, so on his 5,500, he'll be given 4% interest. So 4% of 5,500 for Mosese, it comes to 220, is given on credit balance, whereas Malakai has been charged because he had a debit balance. Now we also have to give salary, less salary. In this case, let's see which two partners are given salary. Both partners. Salary is due, so both partners will be given salary. Mosese is given 5,000, Malakai is given 4,800. Has been recorded. Mosese is 5,000 and Malakai is 4,800. Altogether 9,800 has been given in the form of a salary. Have we missed? Let's check if we have missed any of the entries. Salary we have recorded, we have done interest on capital, we have done interest on current account, we have charged interest on drawings. So that's all. Now let's do the calculation. You do the addings first. So 600 plus 272 total comes to 872, which has to be added to net profit. In this case it's a loss, so it has to be done like this. Loss, that means it's a negative balance, negative profit. So 13,000 plus 872. This is how this part will be calculated to get the leftover profit. Because it's a loss, so we say it's negative 13,000, and then to your loss you are adding interest on drawings and interest on current account of 872. 13,000 from 872, we get still a loss of 12,128. With that loss, we have made some expenses to the partners that has to be subtracted. Now this part we are going to do like this. It will be negative 12,128. We are subtracting 15,020 from it. So our answer will come to 27,148. It's still inactive. That's why I have written it in bracket. Now that loss has to be shared between the partners according to the profit sharing ratio, and profit sharing ratio in this question is 2:3. That means this loss will first divide it by 5, then whatever answer we get times 2 goes to Mosese, and times 3 of that will go to Malakai. When we divide 27,148 divided by 5, multiply by 2, Mosese gets loss of 10,859.20, and Malakai gets $16,288.80 loss. And once we add it to this, we'll get a nil. Now let's move on to current account. Okay, to prepare current account, we'll need information from a profit distribution statement. First thing, we need to write the opening balances that we get from the question, and opening balance for Mosese was 5,500. He had a credit balance, and for Malakai, the opening balance is 6,800 and he had a debit balance. Now, whatever we have added in profit distribution account will go on debit side of the current account. Whatever we have subtracted, it will go on the credit side of their current account. And if it's a profit, then it will be on the credit side. If it's a loss that they are getting, share of their loss, then it's on the debit side. And if it's a share of profit, then it will go on a credit side. So let's look at some of the information that needs to be placed under current account. We know we should have interest on drawings. Before we forget, we need to write drawings 2. This information we can get from the question. Then interest on current account, interest on capital account. The partners also receive a salary, and the last thing is the share of a profit or loss. In this case, it's a loss, it's a negative balance. So it's a share of a loss that they will get. And if it's a loss, as I said, it will be written on the debit side. So for both partners, it will be the same entries. So we have written for interest on drawings, interest on current account, interest on capital account, interest on current account, salary, and share of loss. So if it's added, it will be written on the debit side. If it has been subtracted, it will be written on the credit side. So when we look at for Mosese, interest on drawing has been added, so it will be written on the debit side. Interest on current account, that's for Malakai. Interest on capital account, it has been subtracted for Mosese. So interest on capital for Mosese, it's subtracted, it goes on credit side, 2000. Interest on current account, Moses is subtracted, so it will go on credit side, 220. Then salary, Moses is receiving salary. Sorry, I have written at the wrong place. That was 220 for interest on current account. Salary, Moses is receiving salary of 5,000. And share of loss for Moses is 10,000. You don't need to write in bracket. It will just go on a debit side, 10,859.20 cents. And drawings, for drawings, we'll get the information from the question. How much was the drawings? So Moses had drawings of 12,000. It will go on debit side. Now you can calculate the balance. It's a credit balance. The debits you will subtract, and if it's credit you will add. The end has a debit balance. He had credit of $1,460.80 credit. Credit was less and we are subtracting more. Debit of 12,000, we are subtracting more. So credit and debit you will subtract and our answer comes to a negative. Once it becomes negative from credit, it changes to debit. So now Moses has a debit balance of $10,539.20. Similarly, we can do for Malakai. From a profit distribution statement, all the add will go on the debit side and all the ones that we have minused will go on the credit side. And of course, it was a loss, so it will be on the debit side. So at the end, Malakai also has a debit balance. Now this information we are going to use to do the next part, that's the equity section. Of course, we also have to prepare a capital account. This information we get from the question. Their opening balances for Moses it was 40,000 and for Malakai it was 60,000. Now using the current account and capital account, we are going to prepare financial position, the extract. For Moses and Malakai, you record their capital amount. For Moses it's 40,000, for Malakai it's 60,000, and current account balances, both of them have a negative, so you have to write in bracket. Because it's a negative amount, so capital should be capital plus current account will give you total. Because in this case, current account has a negative balance, so we will subtract. So 40,000 minus 10,539.20 for Moses, and similarly we'll subtract current account from Malakai's. When we subtract, it comes to different amounts for each partner, and when you add 29,460.80 plus 36,239.40, it comes to 6570. Similarly, when you add this way, it should come to the same amount. Now these values will be transferred to capital account, 100,000 and negative 34,030. taxes at both places will be same.